Today, we will do a deep dive in the crypto project named AEVO, which is an Ethereum Layer 2 decentralized derivatives exchange focused on perpetual futures and options trading. In addition, they also offer AEVO strategies, automated vault strategies for yield generation. The exchange runs on an Ethereum rollup based on Optimism stack. Obviously, none of this is financial advice. I am just sharing my countless hours of research in a compressed format, allowing you to get up to speed within minutes. This is the new project on Binance Launchpad, and I expect quite some hype around it. Unfortunately, I am not a big fan again. There is a lot of information missing and the products are partly unsafe. So let's dive into the project. I will not talk much about the vaults, as they are not a very interesting strategy in my opinion. What these vaults do is capping your potential gains, your upside, by engaging in option strategies, trying to generate yield on assets. Strategies are, for example, selling covered call options or selling put options. Many of these vaults are expensive fee-wise. There are a lot of better DeFi products out there. No reason to use these vaults that often will hurt your overall returns by supposedly generating a safer steady income stream. The main product of the projects are options and perpetuals. These products are decent and they were able to pick up some volume recently. But that volume is also highly inflated, as there is an airdrop going on for people using the exchange. So a lot of artificial volume at the moment. Not sure if they will be able to attract that many customers in the future. In other words, the volume seems unsustainable and it will most likely drop once incentives decline. It will be hard to compete with other decentralized alternatives. DYDX already has a lot more volume. It also has a way longer track record and fees are cheaper on DYDX. Comparing this DEX with centralized exchanges, these also don't look great for AEVO. They can't neither beat Deribit in option fees, nor can they compete with Binance in future fees. Binance is slightly cheaper even on the lowest VIP tier, not factoring in BNB discounts. On top of that, it is less cumbersome than using a decentralized product, but also has additional gas fees attached to some transactions. Liquidity obviously also matters. Central counterparts and DYDX are better there too. Before we continue with my security concerns, please do me a favor and like for the algorithm and consider subscribing to not miss any future content of mine. The Perpetual and options product is less safe than on other exchanges. This is because they don't have any kind of insurance in case positions are not covered. True, in theory, every trade has its counterpart, and this is a situation that should not occur, but it has been happening in the past and will be happening again in the future. Examples would be liquidation cascades and one side not having a counterpart anymore, or no sufficient money being available to pay one side of the trade. Reasons for that could be the order book not being deep enough, causing liquidations not to occur, or being executed at prices too low. Competitors solve this issue by having insurance funds or having liquidity pools to compensate in case of shortfalls. I wasn't able to find any information of any safety precautions like this on AEVO. I also was trying to get the info on their Discord, not receiving a reply. This is already looking quite bad for AEVO. For me, there is no reason so far to use this product at all, other than farming for the airdrop, making compromises in terms of security and fees because of that. There is actually one feature I like. They have a nice possibility. You can earn interest on your margin by converting your stables to AEUSD. Momentarily, it's 14.25% APR. Other than that, there are additional limits and guardrails you don't have on competitors. This is only 20x leverage and a max order size of 100k and a max position size of 175k. On the positive side, in terms of security, we got to say is that they at least got audited, but these are not sufficient yet. As you can see in the audit on the exchange, and to my understanding, it is also only partially audited. This is at least the vibe I got from this Discord answer. The team unfortunately seems to be anonymous, or the information is at least very hard to get. I wasn't able to find anything, and questions on Discord were also not replied to. The team behind Ribbon Finance is also responsible for AEVO. At least they have a track record. The two products will also merge when the token generation event happens. RBN token holders will be able to convert their tokens to the new AEVO token by staking it for 9 weeks. The information concerning the merge is very obscure. Questions regarding this also were not answered. It might be the case that there will be way more tokens than promised, as on top of the AEVO tokens, of which there will be 1 billion, the Ribbon Finance token can also be converted to AEVO tokens, making it double the supply in the worst case. If only the circulating supply will be converted, at some point this alone would be 54% additional supply. It could also be the case that the RBN token supply is included in the newly issued AEVO token supply. Documentation here is ambiguous and I can't really tell. Unfortunately, the support in Discord is also substandard and they simply don't reply to most requests. The AEVO token also is terrible in terms of utility. I will present my evidence now. Sometimes you learn most about a token by reading the legal disclaimer. According to their own words, the coin has no intrinsic value. There is also no expectation of profit or return. The token utility is governance, although that only exists on paper. To be honest, the last say is always at the company behind all of that, called Avoe. They state that the voting is restricted to features of AEVO. Avoe is pulling all the strings in the background. I will give more examples why this is later. First, there is another utility. It is staking your AEVO. This allows for double the voting power, discounted trading fees and boosted rewards on AEVO Trader Rewards program. Didn't find any more details about it though. AEVO is a hybrid governance model giving the token holders very limited rights to influence anything. On many things there will be no votings. Committees will make the decision, but the DAO can send members to the governmental body. The composition of the committee is very one-sided though, as the members of the Avoe company are the majority and can always overrule the token holders. And the eligibility for a spot in the committee is very strict too. As you can see, Avoe also wants to claim the lion's share of the profits made for themselves. 55% of the returns should go to salaries of the team on top of the already very generous token amount they get. We'll discuss this later when talking about the tokenomics. They want an annual budget of 5 million in cash and 2% of the fully diluted valuation a year in tokens. What the fuck? We don't even know how many people are behind the project, but seems that these guys are very greedy fuckers and only want all the money for themselves and don't give a fuck about the users. By the way, you should also follow me on Twitter. I drop alpha on there regularly. I, for example, showed a most likely profitable arbitrage opportunity considering this project on there. Back to the video. Let's now talk about the tokenomics. According to Binance, they raised $16.6 million in 3 rounds. Unfortunately, we have no dates given for these raises. They will start with a circulating supply of 110 million, which will explode quite rapidly, as it only takes 9 weeks for Ribbon Finance token holders to convert their token to the new coin. Private sale investors and the team also have a very short vesting period. All their tokens will be unlocked by May 2024. 23% of tokens go to the team and 18.5% to the investors. Airdrop is only 3% and Binance Launch Pool 4.5% of the tokens. The remaining RBN in circulation might suggest that the previously issued RBN tokens are already fully integrated into the 1 billion maximum token supply, but as discussed earlier, we don't know for sure. This document also is not from them but issued by Binance as additional information regarding the Launchpad. The team again is quite greedy, taking 23% of the supply outright. And as we found out earlier, the DAO treasury is also used to pay them superbly. We don't know anything about the token price yet. I guess the lower limit of token price will be $1.5. This is about the price the legacy token of Ribbon Finance is trading at the moment. I would guess that the price will probably be at least $2, maybe even $3 or higher. But that is just my guess. Based on these estimates, the fully diluted market cap would be $1.5 to $3 billion. I would consider this expensive when compared with DYDX, the most used decentralized derivatives exchange. Compared with Jupiter, you could even consider it cheap based on their valuation and their other flaws. Overall, I am not convinced of this product. I will dump my Binance Launchpad tokens shortly after launch. Security concerns and high fees discourage me from trying this exchange. Token rewards are simply not enough to overcome the low liquidity and security concerns to make it worth it. I don't deem it bad enough for shorting though, especially in the bull market. Even inferior projects can do quite well. What are your experiences with AEVO? Have you tried it already? Do you think it's a worthy project or a shitcoin? That's it. Please like and subscribe. You also might enjoy one of these deep dives if you liked this video.